This is Shelley Craft coming to you live on SNNLive. We're at the Cambridge House Resource Investment Conference 2014 right here, Vancouver, Canada. I'm with Jordan Roy-Byrne, the Daily Gold newsletter speaker, featured speaker at the Cambridge event. Jordan, welcome to SNNLive.
Shelley, thanks so much for having me.
Okay, let's get right down to it. What did you speak about today?
Well, I talked about my outlook for the market, specifically precious metals, the stocks, and the junior mining stocks, and I believe we've hit a major bottom.
I can't tell you how many times I've heard that before. Why now?
Well, there's several reasons. First, sentiment in December got extremely bearish, and I was expecting, along with other people, that the market would plunge and make a final low and a new low, and that never happened. So if you look at most stocks, they actually bottomed in late June, and then they tried to retest the low in December, and that didn't happen, and now we're moving up, as you can see. And if the final point to that answer, the Toronto Venture Exchange last week closed at a 9-month high, and no one seems to be talking about that.
And nobody probably seems to know.
Exactly. People are just oblivious to that. I mean, even when I mentioned it to some of my subscribers, they had no idea.
What carried it to that?
Well, I think it's a fact that the market just got extremely oversold. It was extremely oversold in the summer, and it made that low in late June, and then you saw a lot of forced liquidation after that, and I think that was the cause of the second sell-off, where funds and fund managers were getting redemptions, and so you had forced selling, and that ended towards the end of December, of course, because they're selling for tax loss reasons, and even with that, the market didn't make a new low, and so that was a very good sign, and since then, we've just been climbing higher and higher.
Tell me about your newsletter.
Well, my newsletter, The Daily Gold, we focus on precious metals and mining stocks, kind of the medium-sized mining stocks, but also the juniors. I come from a technical background, but I also look at fundamentals of companies, and we're trying to help people buy and sell at the right times, and also pick the right companies that are going to outperform.
So, are you coming at it from a buy side or sell side, or are you objective?
I'm objective.
I like that. That was a good, quick answer. How long have you been doing this, and what's your background?
Well, my free newsletter, I started in 2005, and then I started the premium newsletter in 2009. My background, I have a degree in international economic development, and also I have a CMT designation. I'm a chartered market technician, which I achieved through the Market Technicians Association in the U.S. So that's my background.
So I just want you to know, I read some technical research before I came to the conference, mostly U.S., by the way, and my reaction was, whoa, I'm reading bearishness. I'm reading that the market has reached its high. So you're talking about the juniors in the mining sector at the bottom. I'm reading about the Dow Jones at its top. I see a clinical, I see a switch in sectors.
Shelley, that's an excellent point. If you look back in history, there's actually been many times where precious metals and other commodities have performed well when the U.S. equities or global equities have not performed well. We saw that twice in the 70s. We saw that from 2000 to 2002, and I think we're going to see that again in the next 2 or 3 years.
So I think, you talk about the barometer of where the juniors are, because we're at a mining conference, so we might as well focus on gold, et cetera, and plus that's your expertise. So I see the fuel of the buying into the juniors. It's that cycle back from equities that have, how much of these $500 and $600 stocks are investors going to be buying? Here's all of these opportunities, and now the sector, which will be led, I think, by the commodity prices. So what's your reflection on that?
Well, it's interesting. If you look at, when I was talking about sentiment, it's just every big fund manager, around the world or in the U.S., they've basically gone all in on U.S. equities, and we saw the dumb money really pile into U.S. equities in 2013. I mean, it was huge the way they piled in if you look at the statistics, and meanwhile they were all getting out of the resource market. And so, I mean, at this point it's just common sense. I mean, the timing, that had been going on in 2013 for quite a while, so the timing was difficult. I mean, are we at the bottom in June? Are we at the bottom in December? Or is it going to go longer? But I think now, I feel there's enough evidence to call the bottom.
And something else that you probably realize that I've noticed, and I don't mean to give commentary on top of your commentary and feedback, but I thought that at the end of the year, a lot of the U.S. equities saw window dressing. And, look, these fund managers got to get rid of their cash, because if they're holding cash at the end of the cycle, at the end of the fourth quarter, that leads to redemption sometimes. Why didn't you use the money we gave you before? Now come the first of the year, and they're looking at the markets, and they're reading the same technical reports that I am. Well, maybe we're near a top. So they might be rushing to cash to see what the next thing to do is. Your opinion?
Yeah, I mean, I think the smartest and the most savvy fund managers out there have already done that, and I think they do notice that precious metals and gold has been trading inversely to the stock market. And so, I mean, the big money obviously hasn't gotten in yet. I think it's just been a lot of short covering that's started this move. I mean, we saw some buying in the GDXJ last week, some very big volume, and so that'll be kind of the next step. When the bottom is really confirmed and the stock market starts to struggle a little bit, I think, Shelley, then you'll see the big money start to take more positions in commodities and precious metals.
Do you think the return of money to the commodities market will be seen first in the underlying indexes?
I think you mean the stocks, and I completely agree. I mean, with respect to precious metals, if you look at the gold stocks really started topping at the end of 2010, and then we saw silver and silver stocks peaked in April 2011. Junior gold stocks peaked at the same time. Then gold peaked 5 or 6 months later. So it's natural to expect that the stocks would lead this next move up. I mean, they discounted this bear market far in advance, and what we're seeing now, they're starting to discount the good times that are to come, and I do think the metals will follow.
So for more information, where should I tell our viewers to go? Which website?
They can go to thedailygold.com.
Ladies and gentlemen, Jordan Roy-Byrne, I want you to know I enjoyed this interview. Very interesting. The Daily Gold newsletter, featured speaker at the Cambridge House Conference. I'm Shelley Craft. This is SNNLive. We're at Cambridge House, the Resource Investment Conference 2014 in Vancouver. Jordan, thanks for coming on to SNNLive.
Shelley, thanks for having me on.
Good to see you.